Right, we are 1 minute away from starting. My name is Kevin Hennessy. I'm here with Dr. Robert Minetti. We are going to be presenting a webinar today on PPP Forgiveness. As many of you know, the forgiveness application has officially come out, and we're going to go through some of those changes and how the process is going to go from the best of our ability. Without further ado, I'd like to introduce Dr. Minetti.
Well, I want to thank everybody for attending today. Welcome. My name's Bob Minetti, and I'll be the speaker for today's event. I've included my credentials for you, especially if you want to use this to go after CPE. You need to have those credentials in there for your state Board of Accountancy. So, I want to go over and talk about what our objectives are today. We got the new PPP loan forgiveness that was published by the SBA, and I've gone through that. So, once you finish this course, you're going to be able to identify the requirements for the PPP loan forgiveness. Now, with that being said, I'm going to throw a disclaimer in here. Obviously, I can't cover every aspect of the law in 1 hour. I can't give you any legal advice, and this information is subject to change. I mean, I updated it yesterday, which was May 20th, but I also know there are numerous bills that have been put forth in Congress to make changes, such as extending the 8 weeks to 26 weeks, allowing more of the funds to be used for inventory repurchases rather than simply payroll. And so everything is subject to change. What Congress decides to do, what the SBA decides to do, and what the Treasury Department decides to do. Now, one of the things I'm going to tell you is I'm giving you the best advice I have at this point in time, but some lenders may have different interpretations. And the lenders are the ones that grant the forgiveness. They're the ones that decide on the forgiveness. So if your lender tells you something that is different from what I've said or what's in the instructions, follow what your lender tells you to do, and you can always appeal it later if there's an issue. So I want to do a review of the Paycheck Protection Program. If you were in the last webinar that we did, some of this information is going to be a repeat, but there have been some significant changes, and I've highlighted those changes to make sure I can bring them to your attention, and that's part of what we're trying to do today. So just as a review, the SBA, the Paycheck Protection Program allows the SBA to guarantee loans, but the cutoff date is June 30th. So you have to apply for the loan prior to June 30th if you haven't already applied for one. Now, the original allotment was $349 billion, and they ran through that in no time flat. But they added an additional $300 billion, and we're also seeing a lot of money that's coming back. There were numerous large organizations that really shouldn't have gone after the money. One of the ones, don't talk about the politics behind it, but was the Planned Parenthood, which has over 1,800 employees, and they got $80 million in loans. Ruth Chris Steakhouse got $20 million, huge publicly traded corporation. Now, Ruth Chris did give the money back. Harvard University got millions of dollars, and even the LA Lakers, a basketball team, got over $6 million, and I think they gave that money back too. So some of these companies have come back and said, oops, we made a mistake, we shouldn't have applied for this. And that's putting additional funds there for small businesses. Because these large public companies that have millions of dollars in the bank aren't supposed to be applying for a small business loan. There's actually a whole nother series of loans for mid and large, mid-cap and large-cap businesses that is being funded by the Treasury Department. So they have their own separate program for borrowing money, except for the mid and large-cap businesses don't get theirs forgiven. They have to pay it back, but they're getting very low interest rates. Now, when we talk about the program, the key thing that we're still under is that 8-week forgiveness time. And the money has to be used for payroll, rent, mortgage interest, or utilities. Now, a lot of people, the restaurant industry and other industries have said, wait a minute, 8 weeks doesn't work for us. We got the loan, but we're under lockdown. By decree of the government, we're not allowed to open our business. How do we bring employees back and pay them if we're not allowed to open the doors? So there's
Dr.
a
Manetti,
number of things before Congress where they're saying, hey, we need to
Hold
extend
on
that.
one
We
sec.
need to say, if we're going to hold with the 8 weeks, it should be 8 weeks after the government lifts the lockdowns, or there's also one to extend it for 24 weeks to give people an opportunity to bring their people back.
Dr. Manetti, can you share your screen?
I thought it was. I apologize.
Oh, good.
Can you see it now?
Yes, thank you.
Okay. Don't know what happened there. I thought I'd clicked on it. Maybe I clicked on it before you turned over and let me be the presenter.
Yeah, no worries. Sorry about that.
Not an issue. Hey, if you didn't see it, everything I've talked about, there's a PDF handout of all the slides that you should be able to download and give you all the information in writing of what we're covering today.
Yep, and it's actually in the chat right now. I just added a link to the PDF for you to download right in the chat feature. It says presentation deck, click here.
Yeah, so far, everything we've covered, I think you already knew, so it's not going to be nothing new at this point. And again, the thing was, it's got to be a business, a not-for-profit organization, a veterans organization, a tribal concern, that fits under the Small Business Act. And 500 employees or less is the standard. And there is an exception for businesses in the accommodations and food services. And that's where some of these large businesses came in, like Ruth Chris Steakhouse, because they're in the food service business. So they had that NAICS code that started with a 72 that gave them the exception. Now, the big thing on this is sole proprietors, independent contractors, and people who are self-employed are able to apply for the Paycheck Protection Program and receive funds. And if you look at the congressional record, when they were debating the program, the purpose of this was to help relieve the stress on the state unemployment offices. The feds knew the states were going to get bombarded with unemployment claims when they shut everything down. There was no way that wasn't going to happen. And we've seen it. There was an additional 2.3 million people who applied for unemployment last week. So I think we're right now at about 38, 39 million people lost their jobs. Almost 25% of the active workforce in the United States lost their jobs. So that's an issue. And the state unemployment offices are overburdened. They're using old computers. Many of them, are trying to hire people and programmers to keep up with it. One of the reasons the feds used that flat rate of $600 per week, that's the issue everybody had. Oh, wait, this isn't working because people can make more money staying home than they can going back to work, was because they knew the state unemployment offices couldn't handle variable rates based on the employees' incomes. They just didn't have the software to handle it. And many of the states are rushing to change the rules to allow gig workers and independent contractors who got laid off to collect unemployment, and they're way behind getting those processed because they have to completely rewrite their software. So when we talk about the program, there's one thing in here that I do want to make a talk about, and there's been some changes to this as we've moved along. And that's that assertion you have to make that current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant or the borrower. So what we're saying is you have to make a good faith assertion that you have an economic uncertainty. Well, are your customers paying you late? Have any of your customers canceled? Have you not been able to provide services because the government shut your business down? That throws economic uncertainty into about everybody's business. Now, one of the key things is that they did give some guidance on the economic uncertainty. And the key is businesses over $2 million are going to be audited. Any business that got more than $2 million in a PPP loan is going to be audited. Any business who got under $2 million, they're giving you a safe harbor that says, that you're presumed to have an economic uncertainty. Now, we've seen some discussions on various chat rooms, et cetera, where people are basically saying, hey, this is free money. I applied for it. I didn't need it. Business is booming, but what the heck? I'm going to get an extra 200 grand this year. Don't post things like that on the internet, because that's what's going to get you caught. If you have a business that got a loan for less than $2 million, if you get audited, it's because somebody blew the whistle on you. And I often get asked, well, who's going to blow the whistle? Oh, gee, that's going to be the employee you laid off and didn't pay. When you have that disgruntled employee who lost their job and you kept all the money, they're going to come after you. Now, they did give a time for companies. They had until May 18th. If you got a loan and said, wait a minute, I got a ton of money in the bank, Harvard University, we took, $10 million and we got $49 quadrillion in our endowment fund. Obviously an exaggeration, but their endowment's huge. You don't need the money. There's no economic necessity for that money with that big endowment fund. Or even the LA Lakers, $6 million. I don't think that even pays for a point guard in the NBA right now. So, obviously the money wasn't necessary. They were given a chance to, give the money back. Now, one key thing I want to share with you to make sure we all understand, they're coming after people for fraud, and we're seeing it. We had a rap star in Atlanta. What did he use his PPP money for? He went and bought jewelry, bought himself a new car. Oh, he also paid his back child support, but he didn't pay any employees. Again, those charges, it's a big thing that the government's going after. I gave you a couple of news articles here. It's not free money. You're supposed to use this money to keep your business running and to pay employees. If you use it for other purposes, somebody's going to turn you in. I mean, there's a point you won't. Now, here's one thing I'll tell you, because I did talk to a business owner. I strongly advised him not to do this. He got the PPP loan, paid himself for the entire 8 weeks, laid himself off, and filed for unemployment. He says, wait a minute, there's so many people filing for unemployment, there's no chance of me getting caught. And I'm saying, if you think that, you don't understand the state-of-the-art data analytics that we have available to us today. Because with data analytics, the government can run a list, a database of all the people who were listed. Remember, when you go for that PPP loan forgiveness, you have to provide the information of the employees who were paid and how much they got paid in your payroll reports. They can take that data and run data analytics against the state unemployment. And if you got both, if you got paid and you collected unemployment, guess what? It's going to pop up and you're going to get audited and you're going to be paying the money back. And you could face penalties for fraud, up to and including jail time. So these are things that we need to make sure people are aware of. So we talk about the loan and we remember that, though the Congress didn't initially say how much had to be used for payroll, the SBA said, we need 75% to be used for payroll if it's going to be forgiven. Now, any part that's not forgiven, and they could either forgive the whole thing, forgive nothing, or somewhere in between, depending on how many employees you retained. If there's any part that isn't forgiven, well, the loan payments are still deferred for 6 months, and you then get to pay them back over 2 years with a 1% interest rate. So the interest rate isn't too bad. So if you're close to that 75%, you have $1,000 or $2,000, if you don't spend the money, you didn't spend 75% on payroll and you have to give some back, give it back right away, because you got that 2 years, but you'll get the rest of it forgiven, because they're going to look at the salaries and wages and your full-time headcount, or FTE as they refer to it. Now let's go ahead and do a polling question. PPP loans under 2 million are presumed to have an economic uncertainty and are given a safe harbor. And the answer to that, of course, is true.
Yeah, we ended up getting 38 people. Most people are saying true.
All right, now, here's one of the things that you have to maintain: documentation. You have to have the documentation that shows your economic necessity or economic need for the loan to start with. Customers canceled, customers were paying late, you had a cash flow issue, you were expecting cash flows and the issues in the future. Government shutdown or government reduction in the number of people you can have. Restaurants, you're being told, yes, you can open up, but outside seating only. If you don't have an outside patio to seat people on, where are they going to eat? Or yes, you can serve people, but to-go orders only. And when we come back, they're saying, well, you can only have 25 to 50% of your dining room capacity. Well, I've audited a lot of restaurants, and trust me, I don't know a single restaurant that's operating on 50% profit margins. Most restaurants have very slim profit margins. Matter of fact, the big things they make their profits on are desserts and beverages, especially alcoholic beverages. They can make some money there, but they don't make a lot of money on the food. So to-go orders aren't going to be really helping them out a lot other than cash flow. Now, last time I mentioned to you that the SBA has advised lenders to maintain documentation for 10 years. So they're giving themselves 10 years to audit the lenders. They've also come out and said borrowers have to maintain their records for 6 years after the date the loan is forgiven or paid in full. So you have 6 years after the forgiveness date, or if you have to pay any of it back, 6 years from the date you make your final payment on the loan. You need to keep all of your documentation that supports why you applied for the loan and your requirements for forgiveness, which we'll cover when we go through the application on a line-by-line basis to talk about what we have to do there. Now, again, the basic things to remember when we talk about, the costs. The payroll costs are mortgage and rent payments and utility payments. For the rent, utility, and mortgage obligations, those items had to be in effect prior to February 15th, 2020. So you didn't get to go out and rent a new office space, or you didn't get to go out and buy an enhanced internet service or take on additional things. It had to be something that was in effect before the disaster occurred. And once again, we're looking at a minimum of 75%. You can always pay more than 75% for payroll, but you can't pay less in order to get the forgiveness. And the key thing, you can't prepay expenses with the proceeds from a PPP loan. It has to be expenses that were incurred and paid during that 8-week period. Now, with the EIDL loan, of course, you can pay your accounts payable that you had in effect at the time, and you can also carry that out. The EIDL loan, if you got that in addition to the PPP loan, is not limited to 8 weeks. So when we talk about utilities, the SBA defined utilities as phone, any phone service, and that would include cell phone service used by the business. Internet, and then they specifically rated that as internet access. So that's your access to the internet, your ability to get on the internet, not your website, your blogs, your social networking, or anything like that. It's not everything that's on the internet. When we get down to the application, you'll see it specifically says internet access. Electricity, gas, and water, self-explanatory. We know what those are. And then it said transportation. That's been added in, and that, guess what? That wasn't defined. So what counts as transportation? Is that, company transportation? Is that, buying bus passes for employees to get to work, or subway tokens for employees to get to work? And now I don't live in in Phoenix, we don't have subways. So I just remember hearing about subway tokens from New York. So forgive me if I'm wrong on how the subways work. And then they listed, et cetera. but they didn't define what et cetera was when it came to utilities. So unless they give us a better definition of that, we may not want to jump on the et ceteras. Now, one key thing to remember for self-employed borrowers, if you're a gig worker, self-employed, you're reporting anything on a Schedule C, you had to have taken these deductions on your Schedule C for your 2018 or 2019 tax return. So if you haven't, if you didn't have a home office where you were taking these deductions, or you didn't take the deductions, if you took the safe harbor home office that doesn't break down the individual utilities and mortgage interest, et cetera, then you don't get to include those in your PPP loan. You still have to use that safe harbor you used in the past. So when we look at it, they specifically defined it. It's 8 weeks, 56 days that begins on the date of the disbursement of the loan. And they gave an example, so I like to share that. The first day of the covered period has to be the same as the PPP loan disbursement date. So if you got your money on April 20th, your first date of coverage is April 20th, and then your last date is June 14th, which is 56 days after. So the day you get the funds from the bank starts your 8-week period. That's when you have to start spending the money. Now, the nice thing is they gave us a little bit of an extra break when it comes to that covered period that's in the forgiveness application that was basically put in there because everybody was saying, wait a minute, this is ridiculous. We run our payroll on a weekly or bi-weekly basis. And now does that mean we have to cut special payroll runs at the beginning and end of this? How do we cut a special payroll run when we don't know what day the bank's going to put the money in our bank account? So what they did is they came back and gave us an alternative payroll covered period. And this covers payroll expenses only. This does not cover, the interest, rent, et cetera. So this allows us to move our payroll period, and I think I've got that on the next slide, so let me move forward. Here we go. We can move our payroll period to match our weekly or bi-weekly pay period. So if, in the example, if you look at the second paragraph, if the borrower got its PPP loan period proceeds on Monday, April 20th, and the first day of its pay period following that disbursement is Sunday, April 26th, then the first day of the alternative payroll covered period is April 26th, and the last day is June 20th. So you can see how they move that. So for payroll only, we're allowed to use that alternative payroll cover period in order to align our payroll costs with our normal payroll periods, rather than having to do partial periods and trying to figure out, well, just how much payroll did I use for those 2 or 3 days that were in this week and 2 or 3 days in that final week, because it didn't line up. So the recommendation that I would make is use the alternative payroll covered period to align your expenses with your normal payroll, because the accounting is a lot easier. Your payroll processor is going to give you all of that data in a report. You're not going to have to do any calculations because the report's already going to have what was used for payroll in that pay period. So let's go ahead and do another polling question. This one, I'm hoping I didn't trick anybody on this one because I left it in from last time, but the
a little bit split. Yeah, we've got some good results coming in. We've 2/3 of people have voted. Keep voting, guys. If you haven't voted yet, the polling question is live right now. Have about 70 people have voted so far, 71. Give it one more second. All right, I'm gonna end it and publish. So.
Yeah, we do have to do it within the 8 weeks of disbursement, but you can use that alternate payroll period to have 8 weeks from the date of the start of your first payroll period following the loan disbursement, which makes it a lot easier to do the accounting. Now, for the forgiveness, you got to remember that we have to submit the forgiveness request application, which we'll go over in just a few minutes, to your lender. And you have to certify that the documents you give the lender to back up your payments are true and correct. In other words, don't create a bunch of fake receipts. I think we all understand that. That's always going to get us in trouble. The lender is given 60 days to make a decision on forgiveness. So don't expect them to get back to you the next day, especially with as slammed as some of the lenders have been. Many of these lenders weren't even able to get their funding done. You know, some lenders, you know, it took them 6 weeks to get funds done after the SBA approved the loans. We have other cases where the SBA approved the loans back in April, and we still have lenders who haven't been able to fund the loans because they bit off more than they could chew. They got buried thinking, oh, we're going to help all these people. And then they had to go out and hire hundreds of new loan processors because they got all these loans approved and they didn't have anybody to process the paperwork, which is still something you've got to do. Now, again, when we talk about what can be forgiven, it's salaries, wages, commissions, tips, capped at $100,000 on an annualized basis for each employee. So you cannot get compensated for more than $100,000 per employee, and that's 8 weeks of that $100,000. That doesn't mean if you had an employee on the payroll that was making $500,000 a year that you can't still pay them that. You just can't take it out of the PPP loan. Now, employee benefits, and that includes the cost for vacation, parental leave, family medical leave, sick leave, separation allowances, any type of payment that we gave them when we laid them off, group health care benefits, including the insurance premiums, and their retirement benefits can also be paid out of the PPP loans. And the state and local taxes assessed on compensation, for the employee. And then if you're a sole proprietor, it's wages, commissions, income, or net earnings for self-employment. So, that we report on our Schedule C. And that's capped at $100,000 on an annualized basis, for each employee, including a self-employed individual. So we need to remember that, we're going to be able to look at some additional costs. So the cash is the cash compensation, that $100,000. But, we can also pay non-cash benefits, and that includes contributions to a defined benefit plan or a defined contribution plan, like a 401k for retirement, group health insurance that we pay for our employees, and the payment of state and local taxes, that are coming out of an employee's checks. Now, there is one big stipulation here because of the CARES Act. There were certain time off. If an employee was given 2 weeks sick pay, that can be deducted from, is paid for by the government through a tax reduction, and that's under Section 701 and 703 of the Families First Coronavirus Response Act. If they took that, and you're supposed to take the tax deduction, for that and not pay that from the PPP funds. Another nice thing is that, a housing allowance or stipend can be included in payroll costs. Now, if you have a small business, you probably don't do a lot of the housing allowances. But for the nonprofits, especially the religious nonprofits, the churches, the mosques, the synagogues, many of those include a housing allowance as part of their pastor, rabbi, imam's compensation. So that housing allowance can be paid out of the PPP funds. It's included in costs. And of course, if you do happen to be paying housing allowances for your employees, let's say that you've transferred them to a high cost city and you're paying them a housing allowance, that can be included in the money paid out of the PPP loan. So the non-payroll costs, and the nice thing here is we got to see a really nice change. So what they're saying is we were looking before, and in the last webinar, I told you that rent obligations, were, basically anything you had on a lease. And we said, well, we weren't sure about the interest on, personal property items like a delivery truck or the, equipment in your kitchen or the equipment in your factory. The nice thing is when the new loan forgiveness package came out, real and personal property interest on loans for either a real or personal property. That would be real estate, mortgages, equipment, vehicles. If you bought it and you're paying interest on it and you bought it before February 15th, 2020, if you went out and bought it at the end of February, you can't pay it with PPP funds. But if it was there before that, you can pay that interest. Now you can't pay the principal and you can't do any prepayments of either principal or interest. Only the interest portion of the loan is deductible. And of course, if you have a lease obligation, and that could be for an office, it could be for equipment, it could be for vehicles, those leases, as long as they were in effect before February 15th, 2020, the rent and lease payments can be deducted. And of course, your utility payments. And this is the one I highlighted because internet access. Originally, it only said internet, but on the loan forgiveness application, it specifically says internet access is what they consider a utility. So your social media sites, websites, etc., well, those aren't considered internet, because a lot of us said, well, can we include all of that stuff? Because we all have websites and social media to go with our businesses, but they cut us down on that. So once again, remember that the non-payroll costs are still covered under that 8 weeks from the time you got the loan distribution. You cannot use the alternative payroll period to cover the non-payroll costs. And of course, I remind everybody, you're going to have to turn in the documentations showing your full-time equivalent employees, and that's before and then after and then on June 30th. And we have to make sure that we turn in our payroll reports from your payroll provider, the 941s, our tax filings, the income, payroll, and unemployment insurance filings from the state, the documents verifying the retirement and health insurance contributions, and that you were making them before February 15th, 2020. You can't suddenly start, oh, gee, now that we can include this, let's give everybody health insurance or retirement benefits. Obviously, the government isn't going to let us do that. Documents verifying, the interest, rent, and utility payments, canceled checks, receipts, invoices, all good documentation. One thing I'm telling everybody, if you're self-employed, if you're a gig worker, make sure that, when you get your PPP funds and you're paying yourself from the business account, write a check. Now, I understand, and I got a lot of comments, well, we never write checks, we just transfer the money. That's fine, unless you have to prove what you did with the money. So what I'm telling every small business owner is write yourself a check, and in the memo line on the check, specifically say owner's compensation for, and put the dates. And I don't recommend, hey, I got the loan and I'm going to pay 8 weeks all up front. If you got the loan, pay it out accordingly. Let's say you got the loan today. Give yourself a payment through the end of May, then pay June, and then another one from June till the final date of the 8 weeks. For owner's compensation, obviously we don't normally follow a 8-week pay period unless you're in a C Corp or S Corp where you're paying yourself through payroll, but that wouldn't be owner's compensation, that's regular payroll. So those compensation checks, we want to document the fact that we used PPP funds from it. And I'd even put that in the memo so that there's no doubt when you give it to the lender, hey, these are the PPP funds I used to pay for the owner's compensation to make myself whole so that I could get paid because of the shutdown, the slowdown, and everything else. Remember, you can't go back and pay yourself, okay, yeah, I lost a lot of money in the month of March, and April, and I didn't get paid, and I cut my salary. I got my PPP loan today. Well, you can't go back and give back pay. It has to be for the 8 weeks following the loan. Now, we also have to remember that, we have to track our full-time employees or FTEs. And if you reduce the number of staff, they can decrease the amount that you get forgiven. So you may not get 100% forgiven. And if you decrease salaries for employees who are making less than $100,000 a year in 2019 by more than 25%, that can affect your loan forgiveness. Now, the key thing is you have until June 30th to restore your full-time employment. The problem is you got to spend the money in 8 weeks. So if you got the money back in April, you might be pushing it a little bit to hire everybody up, especially there's a huge number of states out there that haven't opened up yet. They might be partially open, but certain businesses aren't allowed to operate. And it's really hard to hire employees and say, hey, sit down and don't do anything. I mean, technically, if you have the PPP loan, that's what you're supposed to do. And I would suggest if you're going to bring them back and pay them, well, the business is closed, at the very least, force them to do training. Let's increase their skill set to make them more valuable to us in the future. Now, one key thing is, borrowers are not going to be penalized if they made a rehire offer to a laid off employee who declines to come back to work, as long as you gave it to them in writing to substantiate the fact the offer was really made. So if you go out to an employee and say, hey, we want to bring you back, here's the date we want you to start, and they say, oh, no, thank you, I'm making more in unemployment than what I would make coming back to work for you, so I'm not going to take the job offer, your PPP forgiveness will not be reduced because an employee makes that choice. Now, there's another key thing I want to bring up because I happened to catch this one, and it was Secretary Mnuchin's testimony before Congress. And his statement, what he testified to under oath in Congress, was that employers are required to report employees who turn down a reemployment offer, and they must send that information to their local unemployment offices. Usually it's going to be a state unemployment office. Now, it'll be up to the unemployment office to deal with it at that point. Once you make the notification, which most of the time you can do online, in some states you have to send it in, but remember, you want to have it in writing. If you make the notification online, screen print it, because they may come back and this, again, because they're saying that the businesses are required to do this, they could come back and say, wait a minute, you don't have proof that you reported this employee's declining the employment offer, and you don't want to lose any forgiveness because of that. We're not sure how they're going to handle this yet. Again, that testimony was only 2 days ago, so well, no, a couple days ago now because it was Monday, but we need to be aware of that. Now, remember, of course, as we said earlier, if you use the PPP loans for unauthorized purposes, you're going to have to repay the amount. And if they can show you knowingly, intentionally did it, i.e., remember the difference between an error and fraud is intent. If you make a mistake, you're going to have to pay the money back. If you commit fraud, they have the right to go after you. And if you're in a partnership or you're a shareholder or member of an LLC, remember that they can go after every partner, every member, every shareholder for recourse. So if one person does something wrong, everybody can end up paying for it. Now, another key thing that we want to make sure you're aware of, and again, there are now currently bills in Congress to change this. The IRS can't change this. Only Congress can because it's written into law. Section 265A1 of the Internal Revenue Code says that if you receive non-taxable money and use that money to pay bills, those bills or expenses are not deductible on your tax return. So Congress specifically put in the law that the PPP funds are not revenue for income tax purposes. What they forgot to do, and again, you can't blame Congress on this one, even though you might like to, most of them aren't CPAs, they don't really know the tax code, but they didn't realize, oh gee, yeah, you can't take the revenue isn't taxable, therefore the expenses aren't deductible. They are working to change that, but we need to wait for the law to pass. but I'm hoping that that's one that will get done. So let's go ahead and throw out another polling question here, and then we're going to start on the application.
The question is now live. The IRS has ruled that expenses paid with funds from the PPP loans are non-deductible. Vote yes or no now. We're on our polling question number 3. True or false? The IRS has ruled that expenses paid with funds from PPP loans are non-deductible. We have about 70, just shy of 70 votes so far. Let's keep them coming. Please take a second to vote. Ending in 3, 2, 1.
And of course, the answer to that is true. All right, let's take a look at the application. Now, the first part of the application, business name, tax identification number, phone number, nobody's going to have any trouble filling this out. Make sure you note, though, if you did get an EIDL advance, that's that up to $10,000 advance, depending on how many employees you have. It's $1,000 per employee, up to 10 employees, and $10,000 after that. You need to put in what your advance amount was and your EIDL application number. Okay, you don't have to put in, if you got an EIDL loan in addition to the advance, because the advance was the forgivable part. That's the part you don't have to pay back. Well, while you're getting your PPP forgiveness, they want to know what you spent that advance on so they can forgive that as well. Now you need to check your payroll frequency. Is it weekly, bi-weekly, twice a month, monthly? Or for most small business owners, the gig workers, the small business owners, people like me, your answer is going to be other, based on cash flow. Because I can't pay myself on the 15th of every month or the 1st of every month. I pay based on how much cash. So I might take, just as an example, I'm not giving actual numbers. Let's say you take $10,000 one
Bob,
month.
can we move the slide forward?
Oh, I'm sorry. Maybe I should have let you run the slides.
I know. I'm a pro at it.
Yeah.
I'm totally kidding.
So the key thing is it's by cash flow, because a lot of small business owners, and I've done it, some months I might not take anything, because I'm waiting for customers to pay me. I'm working on a bunch of projects, the invoices are out, and I'm waiting the checks come in. The next month I get a ton of checks and I cover it. So we're looking at the average for the year is what you're going to be able to take out of the PPP loans for that 56-day period. So I just recommend putting based on cash flow there as a way to do it. And of course, your covered period, that's going to determine, if you're using the regular covered period, it's the date you got the disbursement till 56 days later, or the alternative covered period is the date of your first payroll period, the start of your first payroll period after you got the disbursement going out for 8 weeks. If you did get more than $2 million, you have to check the box so they can audit you. They're going to make you self-report how much you got. You'd think they would know that already. Now, then we talk about the forgiveness calculation. And we can walk through this, your payroll costs, your business mortgage interest. Remember, it's interest only, or rent and lease payments, and your utility payments. And of course, we'll be breaking those down further, but you bring everything up to this page. Then we report our salary and hourly wage reduction. How much did we have? Our full-time equivalent reduction quotient, again, from the schedules further down. That gives us our potential forgiveness amount, the modified total. Then we look at the PPP amount and we make sure that our payroll cost was at least 75%. And then we take the smaller of lines 8, 9, or 10, the modified total, the PPP loan amount, or the 75% payroll cost, and that's how much that we can have forgiven. So again, just like we did in the application, we're going to have to give a number of certifications. And the nice thing is that, the lenders aren't on the hook. So I'm really expecting most of the lenders to fly through the concept of, going ahead and giving everybody forgiveness unless they can really find something that's in your application that says you shouldn't have it, because you're going to certify that you accurately verified the payments for the eligible payroll and non-payroll costs, and the lender doesn't have to audit this application. They're allowed to accept your self-certification, and if the SBA or Treasury Department thinks you did something wrong, then they're going to get to come at you. And where are we going to see things? Well, let's say you have people that, you're self-employed, and your income from self-employment, last year you were at, $250,000. This year you're at $500,000. You doubled your revenue or your personal income, and you got a PPP loan. They're going to ask some questions about, well, gee, you saw your AGI jump up like crazy. Where was your need for this? And that's where I expect to see a lot of audits coming, where you have at least the small business owners, where, their personal income jumped through the roof, and, they took out the loan. Now, if they paid a lot of employees as well, I don't think you'll have a lot of problem. If you've got 100 employees, your income went up for the year, but you've paid all of your employees because of a shutdown or a slowdown in business, I don't think there's going to be any problem with the forgiveness. Now, that's of course a personal opinion, and I have no inside knowledge on what the Treasury Department or SBA are going to do. Once again, they remind you that if you commit fraud, they're going to come after you, and you can pay hefty penalties and even go to jail. And that the tax documents you're submitting to the lender are consistent with the tax documents you submit to the IRS and your state unemployment office and your state taxing agencies. And yes, using data analytics, these are going to be easy things to check. So whatever you turn in for your tax returns needs to be what you have actually filed. And that's probably the easiest thing for them to check. And also the fact that the SBA is going to have the right to request additional information, and the SBA has the right to audit you to verify the information you gave to the lender. No surprise there. We already knew that was coming. So when we talk about the Payroll Protection Plan, we talk now breaking down these schedules. Schedule A is really simple. We enter the cash compensation that we paid, our full-time equivalents from our worksheet, and then we're looking at the adjustments. Did we have enough, or did we have a salary or wage deduction? Did we reduce somebody who made less than $100,000 a year? Did we reduce their income? And we need to put that in there so that they know what the numbers are. We enter the cash compensation from table 2, and we're going to go over each of these tables, but I wanted to walk through the whole application with you. And again, our average FTE. Then we enter how much we paid for employer contributions for health insurance, for retirement plans, and state and local taxes on employee compensation. This is where I say we want to be careful. I got a whole lot of questions after we did the first one. Those of you who were there, you can remember that spreadsheet where I answered all your questions and we got back to you. A lot of questions were, what if I fund my full year retirement? And I'm thinking here, the reason they're asking for how much you paid, they're going to look at how much you deducted for retirement contributions in your last tax year, 2019. And if your 8-week payment doesn't coincide with that, it could be a little bit more, because we could have said, yeah, we upped it, or we gave everybody pay raises in January, so the percentage is the same. But if you suddenly have a huge amount there that's inconsistent with prior payments, I think that could be a potential red flag for an audit. That'll be one of the areas that they'll be looking at. And for compensation to owners, all you got to do is stick the amount in here. Now, one nice thing they did for us, they gave us the amount, $15,385. That is the maximum owner compensation, because we were arguing, well, is it 2 months? Do we take 12 divided by, we take the annual salary, 100,000 divided by 12 times 2? Are we going by 56 weeks? The nice thing is they carefully defined it for us. The maximum owner compensation that is forgivable is $15,385. Does that mean you can't pay yourself more than that? Absolutely not. If you have the cash flow, you can pay yourself more than that. You just can't have it forgiven, and you can't pay it out of PPP funds. You have to pay it out of other business funds.
Dr. Minetti, can we stop and talk about that for 1 second?
Absolutely.
So, and the other thing to keep in mind is that I think that they're going to go back and look at 2019 wages for the owners, correct, for forgiveness purposes?
Yes.
So that's very, very important for you guys to know, especially if you're a single member S Corp or a sole owner S Corp and you just kind of converted last year and maybe didn't take a paycheck. That could be an interesting situation. What are your thoughts on that, Dr. Minetti?
Well, yeah, again, it's going to be interesting with S Corps, because with S Corps, they're specifically stating it's the payroll amount that can be forgiven, not dividends. Because remember, in S Corp, you get payroll, but you get dividends, and dividends don't count as owner's compensation under the PPP. Partners, if you're a partnership, partners' compensation can't be paid out of the PPP loans, because each partner is supposed to apply for their own PPP loan as if they were self-employed.
So just keep in mind, it can't be drastically different on the forgiveness aspect. You can pay yourself, like Dr. Minetti just said. However, you may not get forgiven for the wages that you do pay yourself, because you will be making a certification that it's not in excess of your 2019 wages.
Yeah, the area where I think you might have trouble is, let's say your gross income from self-employment, and they're probably going to take a real close look at your Schedule SE on your taxes. What did you pay self-employment tax income on? But then we're looking at that, and let's say you had $30,000 last year in self-employment income, and now you're claiming that you're going to pay yourself $15,385 for 8 weeks in 2020. That's going to get audited. They're going to ask some questions. I just think that those number differentials are going to be there. But now, when you look at that, and I've talked to people and they say, well, they're looking at the self-employment line, but then we also look at a number of businesses where you might have had a large amount of depreciation, which is a non-cash business expense, but that compensation, that depreciation, was really something you paid yourself last year. As long as you can show that you transferred the money, did you transfer at least, it's a little over $7,500 a month into your personal bank account from the business bank account, you can show that cash flow. Yeah, I paid myself this. Yeah, we had some other non-cash expenses like depreciation, business use of the home, other things that were really there, but I didn't have to pay taxes on them. You may have to provide your bank statements to show, oh, here's the transfers into the personal bank account of the owner last year, to show that we transferred at least 75, and I'm not going to do the math in my head, let's just say 7,500 plus per month in income. Does that help?
Big time.
Okay. So now then we add up those payroll costs, so then we have to do the full-time equivalents to make sure, if you haven't reduced your number of employees, that's pretty easy. You just check the box and move on. You don't have to do the rest of it. However, if you did have a reduction in FTEs, you got to do the average FTE during the borrower's chosen reference period, which was, last year, same time, or, the period of January, up through February 15th, and what were your average FTE, and then you have to determine what your reduction quotient is by dividing 11 by 12. Well, we're all accountants. We can do that math. It's not very hard. Now, when we look at our, salary and hourly wage reduction, we're looking at, did we reduce somebody's pay rate? And this is only for employees making less than $100,000 a year. If we gave somebody a pay cut that was making more than $100,000 a year, for example, as the owner, you cut your pay to make sure you could pay your employees, you don't get penalized for that. That's perfectly okay to do. Now, then we go in and do the calculations, and it's really simple. We enter the average annual salary during the cover year period. then the average salary between January 1 and March 31st, and we do the math. And these are simple math problems. Fill in the blanks and pull out your calculator. All of us as accountants aren't going to have any trouble with this. Now, one of the key things I wanted to make a note, because I know we had discussion on the last one, is that per the SBA, the FTE is based on a 40-hour work week. And there were discussions, well, some states, and also the ACA FTE requirements, and some states requirements for unemployment or other things for determining a full-time employee isn't necessarily 40 hours a week. I've heard from people that says, well, my state has 38 hours. My state does 32 hours, etc. Well, for the PPP loan, it's 40 hours. So we're going to take part-time hours and divide by 40. Now, the nice thing is they gave you a simplified method, a safe harbor. If you work 40 hours or more a week, that counts as one FTE. If they work less than 40 hours a week, they count as a half. So if you don't want to do all the math, you can simply do the simplified method, and that's an easy way to calculate your full-time employees. Then we have to calculate that reduction. And remember that we have that safe harbor for the FTE levels. So, if we went out and offered somebody a job and they didn't come back, we have a safe harbor. If we brought them back by June 30th, even if that wasn't in our 8-week payment period, they still count. Remember, the lender is going to have 60 days after we submit the application. And I don't think most of them are going to start taking applications until June 30th, because we need to know how many employees were brought back. So that's one of the key things that we're going to be looking at. And then, of course, the schedules are pretty simple. We need to give the employees' names and the employee identifier, i.e. their social security number. This is why it's going to be easy to find out, gee, did people double dip and they get the PPE plus the self-employment, or were they paid by their employer and apply for unemployment? So we're looking at that. We have to list those employee identification numbers. And then we look at the people who were covered under the payroll period or the alternative payroll period, and they got compensation of more than $100,000. We need to come back and make sure that we pull that compensation down. We can't take more than that annualized $100,000. So then we enter the safe harbor amount for the full-time employee exceptions, and we look at the calculation. And remember, it's based on a 40-hour work week, so it's pretty simple to calculate. And then, when we look at the Schedule A, these are the things that they're talking about. Some of the documentation, bank account statements, third-party payroll service provider statements. That's great. If you're using a payroll provider, they love it because you got that third-party independent person giving the information. Your payroll tax filings, your business filings with the state, with the unemployment insurance tax filings. These are all going to have to be turned in. Payment receipts, canceled checks, other documents to show contributions to health insurance plans and retirement plans for anything that you want forgiveness for. You need to make sure that we keep documentation of the hours people worked, especially part-time and seasonal employees, for that FTE calculation. And of course, we need to keep copies of the lender amortization schedule, or we need to go back to the lenders for where we purchased real estate, a building, equipment, vehicles. We need to have the breakdown between how much of the payment was interest and how much of it was interest. Because, interest and how much was principal. Because remember, only the interest is deductible. And of course, our rent or lease payments, canceled checks, ACHs, invoices, etc. Same thing for the business utility payments. And remember, you got to send them a copy of the February utility payments, lease payments, and mortgage interest payments in order for it to be deductible. You got to show that you had this in place prior to February 15th. and then we work out, again, the documentation over working out all of our FTEs and making sure that we follow and meet that requirement. We already kind of covered that. Then, of course, we have the demographics. You don't actually have to fill this part out. I just included it. They're asking for the information, but there's no requirement that you provide it. So, last polling question. Maximum, well, I'll let you go ahead and pop it up.
So it's been popped up. It's true or false. A maximum of $15,385 in payroll compensation can be forgiven for self-employed or owner employees. Again, this is a true or false. We've got 40 plus answers coming in. A maximum of $15,385 in payroll compensation can be forgiven for self-employed or owner employees. We are approaching 60 votes. Give it another second or two. Please get your votes in. A maximum of $15,385 in payroll compensation can be forgiven for self-employed or owner employees.
98%. Looks like everybody knew the answer to that. Of course, the answer was true. I know we're at the end of the hour, but I'm willing to stay on for a little while. If anyone has any questions, I'm more than happy to try to answer them for you.
We only have 43 of them.
Hey, so that's a lot better than last time.
Last time we did quite a bit too. All right. So
we had 300 questions last time. It took me all day to finish answering those questions.
Yep. So please put your final questions in. We're going to try and plow through these quickly. So the first one comes from Mr. Gallo. Hello. The forgiveness application says eligible payroll costs. Borrowers are generally eligible for forgiveness for the payroll costs paid and payroll costs incurred during the 8 weeks, 56-day covered period. Does this mean the payroll costs that were paid and also incurred, or the paid or incurred? I think that
I can answer that question, because also in the instructions, it specifically says, like if you're using the alternative payroll period, if the payroll costs were incurred, but they're paid on or before the next regularly scheduled payday, they can be forgiven.
I found that wording interesting, because I think it said next payroll day, and I don't think it was like payday. So it's a little interesting. We'll see how that shakes out. Owners of S Corps, can owners of S Corps use their share of health insurance and retirement plan contributions used for forgiveness?
I would say yes, because again, you're going to pay that through payroll. That's normally going to be paid through the company payroll, and even if you don't take a salary, that would be included as a payroll cost.
I'm not sure. So actually, owners of S Corps typically don't pay through payroll for Section 125 plan benefits. It actually has to be added to their W-2, but it's typically paid directly by the business, right?
Again, if it's on a W-2, I would argue anything reported on a W-2 is countable as payroll.
Fair enough.
It's the IRS's definition. I love the easy ones.
Bob, that came from a CPA, so his guess is as good as ours.
And I agree with that. I'm not claiming that I'm 100% right on everything I told you. Everything's subject to change, and these are my interpretations.
100% agree. Steve Kenny asks, is a self-employed individual with no payroll with earnings in excess of $100,000 strictly limited to the forgiveness of the $15,384, or can he or she add a SEP contribution to try to get full forgiveness?
That's a good question. They limited the compensation amount for self-employed individuals for $15,385, and they didn't address that. If you want to be aggressive, you could probably say it's a non-cash payroll expense, but again, because you can, unless you made regular monthly SEP payments all throughout 2019 and didn't do a lump sum payment like most of us do, you could probably get away with it, but you're being real aggressive. I don't want to really say yes on that, because I'm going to say guidance forthcoming.
Okay. Uh, we got Dave. Does an auto lease qualify? Does an auto lease qualify under the lease forgiveness or transportation forgiveness provisions?
I'd take it under the lease because you know for a fact it qualifies under there.
Thank you. Is there any way to get more from the EIDL because they are really taking away your safety net, making it feasible for a business to gamble? No, you can request an increase. I'll answer that one. It's capped currently at $150,000. Within 6 months, you can request an increase. I'm not sure whether they're going to actually honor it or not. Dr. Minetti, do you have anything to add on that?
Well, whether they honor it or not, I think it's going to depend on if there's any money left or not. Remember, Congress only gave a certain amount of money for those, and they separated out the advances, that $1,000 to $10,000 advance, from the loans. They capped the loans. Originally, Congress said the EIDL loan could be $2 million, but it was capped by the SBA simply because there were so many applications. There's no way they could give all these companies $2 million and have anything, too many people would be cut out. They're trying to help as many small businesses as possible by capping it and saying, yeah, at least everybody gets something.
I want to add to that. There are several qualifying events. I'm starting to see a lot of people get denied and declined for the EIDL based on credit scores. They're not only looking at your credit score, but they also look at your business viability. So they're not going to chase you down a rabbit hole of you going out of business. If they look at you just completely and totally tanking and you're asking for increases, it cannot be the only thing to keep you going. I'll just let you know that. They're looking at your ability to repay the loan, your business viability, and your credit score.
And of course, remember that, loans under $25,000, you don't need to have any collateral, and it's a personal guarantee only. Loans over $25,000 could require collateral and or a personal guarantee.
I think they increased that to 100,000 or 200,000 because it was 25 originally, and I think they recently just bumped that up. But
they could have. I might not have seen it. I've tried to read everything I could on this. If you do see it, shoot it over to me so I can make that update.
Yeah, I'll send you actually my closing docs, but just make sure that you read your closing documents on that EIDL very closely. One other thing to add is 1 year after closing on your loan, it is fully collateralized by 100% of your business assets, current and future business assets. So if you buy a truck tomorrow, it's going to be collateralized by that. Anything that is covered, that it's using it for collateral, you have to carry hazard insurance on it starting 1 year after you receive the loan. So that insurance cost, depending on your type of business, might be extreme, worth considering.
The other thing to remember, again, is that $25,000 safe harbor. If they offer you, I know when I applied for the EIDL loan, they offered me a ton, and I said, no, I can get by on 25. That's what I need because I've got the PPP to cover payroll. I'm a service business. I don't have inventory or other costs to deal with. So I said, okay, I'll take the 25 and, no personal guarantee and no collateral. You got that safety if you're a service business. But, again, if you're looking to repurchase inventory like a restaurant or something like that, you may need to go more, but they'll take a UCC lien on those inventories you purchase.
Excellent. Thank you. Ryan Blair, what if you made a new hire during the 8-week period? New hire was a 1099. Can that person be included for forgiveness? Short answer I will say is yes. If you're paying them on your payroll, payroll wages can be forgiven. However, 1099 wages will not be forgiven.
Yeah, that's an independent contractor. They should be filing for their own PPP loan if they're 1099 independent contractors.
All right, the next question is, payroll for the 8-week period of 2020 is going to be less than the test period in 2019 because the test period included state unemployment and bonuses, neither of which we will pay in the 8-week period of 2020. We've not laid off anyone, but our payroll is still less because we maintain the 75%. Do we need to pay back the difference between what was borrowed and payroll? We did not have a mortgage or rent, so that will not be enough to make up the difference. All I will say is that once you reach the end of your 8-week period, you can continue to use this loan for payroll and other defined expenses. I think for a majority of my clients, I've told them just to continue to run payroll until they have completely used all loan proceeds. And then you'll have a 1% loan that'll be paid after over an 18-month period starting 6 months after you get the loan. So I think that it would be smart to continue to use it depending on your cash flow situation.
I don't disagree with that. There's nothing wrong with doing that. That's completely good faith. Or on the alternative, any amount you didn't use, if you have other sources of cash, you can pay back and not incur any interest at all.
So Molly Wilson, can we clarify returning to 75% of previous payroll in terms of dollars versus full-time equivalents? If 75% of dollars are spent, do FTEs still matter and vice versa? They're independent measures. They're looking at both. You can use 75% of your forgivable funds must be payroll. So that's a good benchmarking indicator that will allow you to clarify how much you could have qualified for forgivable expenses in other amounts, mortgages, mortgage interest, rent, utilities, etc. So one is to figure out how much other expenses you could have. And then the other is to see if your overall forgiveness will be reduced by a percentage, and that is your FTE. Dr. Minetti, do you have anything to add on that?
That's a great explanation. I have nothing to add.
Awesome. Can you talk more about exactly what they mean on retirement benefits covered in PPP? Is this company matching? Yes, it is. Anything to add there, Dr. Minetti?
No, again, as long as it's a defined contribution or a defined benefit plan, you're okay.
So we have Lisa Bell, who loved your webinar last time. Thanks for coming back, Lisa. Can self-employed individuals use their self-employed health insurance and SEP contributions as part of their payroll costs? I think I'll let you take that.
We already answered that one.
Agreed. All right. So Lisa Muller, S-Corp business. Each year we contribute money to a company profit share for our 401k plan. Can we make a contribution to the profit share from the PPP loan?
No, I think they're going to look at how much did you contribute last year and break it out to, what's the weekly amount times 8. And that's what you'd be allowed to use for this year. You could probably get away with a small increase saying, again, we increase payroll and it's a percentage or, well, prior to February 15th, that we have documentation to show we increased the amount in the profit share plan for the employees, and that information was disseminated prior to February 15th, then I'd say yes.
David Silva, if you have an employee, not an owner, who makes over $2,600 a week because our payroll is paid over 32 weeks because we're a seasonal business, but less than $100,000 a year, he makes 80 grand per year. That employee is going to be capped at the $15,385 for the 8 weeks. Yes, every employee will be capped at a maximum of a prorated amount of $15,385. There is not an example where an employee would be able to be forgiven for more. You can certainly pay more than that out. You are allowed to pay the employee the full $2,600 a week that they make, but you can plan on only being forgiven for about $1,932. Interest on credit card payments is not a covered expense? Question mark.
It depends. Yeah, a lot of small businesses use credit cards, and that's really their accounts payable. They go ahead and I'll give you an example. In my business, everything gets paid on a credit card for the company, and so I have that. So the credit card bill is my AP. So the argument is, yes, when you're dealing with accounts payable, that can be included in the EIDL, that you got from the EIDL. Now, remember, with the PPP, doesn't matter whether you wrote a check, paid cash, or paid with a credit card, as long as those expenses were incurred during that 8-week period, then that counts towards allowable uses of the loan.
I did not hear a clear account of transportation was gas included for company vehicles. You and everybody else has not gotten a clear account of transportation. So welcome to the club. We don't know what that word means. It has not been defined by either the government or the SBA. We're waiting for more clarification. Things that we think it could be transportation. It could be a bus pass, a subway pass, might be mileage reimbursement, could be fuel. We are unclear.
I've even had people argue, could it be plane tickets for employees who have to travel for work and we're still allowed to get on airplanes?
Fair. I mean, there's a lot of things it could be, but we don't know. We got another question about, is there a way to get more on the EIDL? Short answer is no. So do allowances to management employees or other employees count as transportation costs? So we're unclear on what transportation costs constitute at this time. Next question, how about back rent? And I think that kind of will touch on the incurred or paid. What do you think, Dr. Minetti? Back rent.
Back rent under the PPP loan, the answer is no. It has to be incurred and paid during that 8-week period. However, for the EIDL loan, if it's in your accounts payable, if you have the invoice but haven't paid it, you can pay it because EIDL loans can be used to pay accounts payable and other operating expenses, working capital.
Incurred or paid, or incurred and paid?
Yeah, there's been a lot of discussions on that all the way around, including between the two of us earlier this week when we were mapping this out. And, the safety thing, I think, is if you use the accrual basis and say, here's what it cost me over that 8-week period, I think you'll be okay, but it might not hurt to pay it within the 8 weeks as well.
This is actually that question came from a restaurant client. So I know what my thoughts are as it stands right now. Your biggest barometer for forgiveness is going to be your full-time equivalents coming back to work and the amount that you expend in payroll. I think that when you expend that amount in payroll, for those of you that pay a prime bill for real estate or rent, you need to get the money out the door in payroll to create that pool of what can be forgiven, back rent or current rent. So make sure that you're getting people paid. I'm unclear in understanding that PPP cannot be used for retro back pay. We don't think so.
Well, that's absolutely true. You can't pay them before either the start of the period or the alternate payroll period. No back pay can be covered. It's very clear on that.
Donna, do self-employed individual draws count as PPP forgiveness? You did a great job of explaining that last time. Do you want to cover that one more time?
Well, the draw really is owner's compensation, but what they're really looking at is how much did you pay taxes on last year for total compensation? What was reported on your Schedule C? Because again, self-employed business owners, you schedule your draws whenever you want, and your taxable income isn't based on how much you take in draws. So you want to look at that taxable income, and that's why I say for the use of the PPP funds to owners, you want to specifically write a check the owner deposits in their bank account that specifically says owner's compensation and the dates for that compensation. So there's no doubt with the lender what you spent the money on. Because a draw, they could argue, well, you didn't normally take draws last year. And I've had months where I didn't take draws for 2 or 3 months. And then, all of a sudden, all the projects I was working on finished up and I got a ton of money and I take my draws. And so it's completely adjustable. So document as an independent contractor or small business owner, write yourself a check that says owner's compensation and the dates covered. And you're going to end up writing probably 3 checks. One from the date the loan was funded to the end of that month, one for the full next month, and one for the first of the following month until the final date of the 8 weeks is up.
At what point in time after June 30th do we need to apply for loan forgiveness, and is sooner the better? I don't think we're fully clear on exactly how this is all going to go unless you think differently, Dr. Minetti, but I think you're going to apply for your loan forgiveness. I think probably before June 30th, right? And then I think—
Well, not necessarily, because it depends on when you got your disbursement. We're seeing businesses that haven't gotten their disbursements yet, and we're already towards the end of May. So if you're getting your disbursement now, you cannot apply for the forgiveness until the 8 weeks are up. So it's going to be June 30th, or when your 8-week or alternate 8-week period, if you chose an alternate 8-week payroll period, is up, will be the soonest that you can apply, because you have to have actually spent the money before you can apply for forgiveness.
Okay. Is interest on a business line of credit forgivable? The loan is secured by business assets. I think my answer on that would probably be a no. If the note isn't directly tied to personal property or business property directly, it could be secured to, but if it's not for, what are your thoughts there, Dr. Benetti?
Well, that's going to be real simple. Did you use a check or funds from the line of credit to purchase those business assets prior to February 15th? I would argue, yes. It doesn't matter whether it's a line of credit or, a straight loan. They didn't break that down. If you cannot document that you used the loan proceeds to purchase the assets, you use them for other purposes like, owner bonuses or company party, something that isn't covered, then the answer would be no, you can't deduct that part of the interest.
Yep, I think if you're just using it as operating capital, but it's secured to a company equipment, that doesn't count.
No, you would have had to have purchased the equipment with the funds from the loan.
Does a person working 30 hours a week qualify as a full-time equivalent? It counts as 3/4 of a full-time equivalent. When you're doing your quantification of full-time equivalents, each person that is regularly scheduled to work 40 or more hours in a week can only count as one person. This is an advantage to you as a business owner. So if you have somebody that works 60 hours a week, it does not count as 1.5 people. When you have your remaining pool of part-time employees, you're going to, each of those people, you're going to do the math on 40 hours a month to figure out how many part-timers count as a full-time equivalent. So it's actually really beneficial to you. It'll keep your FTE number down from your part-time pool of labor.
Now, don't forget the fact that you have that safe harbor exception, and where you'd see a lot of this is in fast food restaurants, McDonald's, Arby's, other types of franchises where they hire a lot of high school kids that might only work 10, 12 hours a week. You can use that. Yes, we're going to use one full-time equivalent for every full-time person who works 40 or more hours. And then we can use a 0.5 or half full-time equivalent for people working less. So if you got a lot of high school kids working in your business for 10 or 12 hours a week, after school weekends, you might want to consider using the alternative calculation.
I think that actually might depend. You're going to want to run the math either way, because if each person only works 10 hours a week, as an example, that giving them 0.5 would be giving them too much credit. So you'd want to add up all of their hours and divide it by 40. But it depends. Like, everybody should be doing that math both ways to see the most favorable position for themselves.
Oh, I agree. You should do it both ways. I was just mentioning that there was an alternative. You want to do whichever one's more favorable to your business. Absolutely.
Yep. So you can either take the pool of part-time hours, divide it out by 40 hours in a week, or you could take a half of a full-time equivalent for each part-timer. So if each part-timer is working 30 hours, counting them as half would be a big win. David Silva, what about being able to deduct your escrow amount paid with your mortgage payment? The escrow is for our real estate taxes.
No, real estate taxes cannot be paid out of a PPP loan, only the interest on the loan.
What doesn't exceed 8 weeks for an owner-employee mean? Can you give a raise to non-owners? Yes, you could give extra money to non-owners as long as it's equitable and fair. You want to be careful that you're not discriminating against people. If you're giving extra money, just make sure that it's based on class and job role, not age, sex, gender, or things that could be perceived in that way. But make sure that you're being fair and equitable to everybody that you're giving a raise to. Do you agree?
Absolutely.
All right. Jim Fitz, awesome guy. Hey, I came late. Did they discuss paid and accrued? I paid for wages owed on May 5th. No, you cannot pay back pay and have it be forgiven. Do you automatically qualify for the safe harbor if you get less than $2 million, especially if you're a seasonal business that hasn't been allowed to open during the 8 weeks? The only thing that the safe harbor is just that there was a need for the loan. If you're getting under $2 million due to economic uncertainty, you're getting a safe harbor that it's fair to assume that you needed the money and you didn't have adequate access to liquidity otherwise. You agree?
Absolutely, because most small businesses, and I'll be honest, when my business needs money, it's a personal loan. The banks won't give a small business, it's hard to get loans for a small business that isn't either co-signed by or collateralized by the owner unless you have real estate or equipment to put up as collateral. And that's why they know small businesses can't go out and get other funds. Whereas a large publicly traded company, and we'll use Ruth Chris since they've already admitted that they had other accesses to funds, you got $500 million, a $500 million in the bank, yeah, you had access to funds. If you're a small business owner, you got $500 million in the bank, hey, more power to you.
C Corp. What if the owner employee did not get a payroll check in 2019? Can they now receive a check?
Can you document? Here's where I'd have to say it's going to have to be on W-2. You're going to have to document that it's for services rendered to the corporation and explain why they didn't get paid last year. And you're probably going to get audited on that one. So you better have pretty good documentation. It's not disallowed, but it's definitely going to be a red flag.
That's going to go for the same as an S Corp. If you didn't take a paycheck in 2019, there's a chance that you'll be audited and you'll have to explain it. Great bookkeeping partner of mine, Fiona. What can you include under owner compensation if you changed to an S Corp in the middle of last year and your W-2 only covers payroll for 6 months?
Oh, I would basically take that 6 months and break it up on a weekly basis because you have a valid explanation of why you didn't have payroll before you were an S Corp.
So you could have 850 seconds, like just do it as 8 weeks in 2019 for the 6 months they were open, you think?
Yeah.
I agree. Jim Fitz again, can I hire someone to cover a worker that is out of work and have them leave after 3 months? Will that be forgiven during the 8 weeks?
Yeah, there's nothing that says you can't hire a replacement. If somebody's out sick or, if they choose not to come back, you're allowed to hire replacement employees to keep your business running.
Here's a fun question that I think we've thought about is what about new businesses before 2/15/2020, but after December 31st of 2019? Is owner compensation calculation different?
Good question. I don't know the answer to that one because they haven't given us any guidance on, you had to be in business prior to 2/15, but if you started the business in January, they haven't given us a lot of guidance on how we're going to do it because you don't have a tax return from last year.
If you're a corporation and own all the stock, are you considered an owner for PPP purposes or are you simply an employee? If so, do you need to fill out line 9 as an owner?
Well, if it's a C Corp, the answer is, C Corps can't pay owner compensation. They have to pay payroll or dividends. Same with an S Corp.
So Steve Kenny, who I believe is a CPA, is saying, I have a very similar question. How can we chat offline? So I'll make sure you guys can look up Minetti CPA in the emails that I sent you to register for this. Dr. Minetti has been very accessible. You can also look him up on LinkedIn. He replies to messages. He's been great to work with. But if anybody's looking to give a direct, reach out to him directly, you can do it on LinkedIn or you can email him right off of his website. I would recommend for any of you people that came today that feel like you got a tremendous value from his presentation, I would ask that you give him a recommendation on LinkedIn. He's been doing great work for all of us, so please go on and give him some props.
The best way is to either email me or hook up with me on LinkedIn. I'm going to be honest with you, I have a site for new customer contact on my website, but I seem to be getting a whole lot of stuff from overseas, hoping that I'll click on their links in order to. So I'm real careful about getting stuff on that website if I don't know where it's coming from. The best way is to email me directly or hook up with me on LinkedIn. I will accept a LinkedIn request from anybody who is on today's webinar.
Ron Rice, can PPP proceeds not forgiven be used for other business expenses and be used after the 8 weeks are up? That is a great question. What do you think, Doctor?
Well, yeah, you're going to have to pay them back. The key thing is it can't be forgiven if you use it after the 8 weeks or for other purposes. And that means you've got that 2-year payback period and the 1% interest, but there's nothing that specifically says you can't use it for something else. It just can't be forgiven.
I personally like the idea of just leaving it attached to payroll until it's gone. That's my preference. I know that you could use
Especially if they extend the period out to 24 weeks, like one of the bills in Congress is saying.
Yeah, my favorite concept is separate bank account, ideally, tie it to payroll, pay all your other bills that you can have forgiven out of it. After that period is up, use it for those same purposes until it's fully expended. That's, I think, the safest play.
Absolutely. I completely agree with you there.
David Silva, the employer share of state and federal unemployment are included, but your Social Security and Medicare match is not, and that is completely true. You are correct. Social Security and Medicare for the employer's portion are not included in forgiveness. In fact, we're happy that the employee's portion is forgiven because the language in the law was a little scary. So for Schedule C, owner's compensation made $80,000 in 2019. Is compensation limited to 8 weeks, 12,300, or can you pay yourself the 15.3K? So
if you're going to pay yourself more, again, you got to look at your, not just the, what was on the Schedule C for owner's compensation. I would say also look at your, non-cash issues on your return, depreciation, amortization, home office business expense if you had a home office. Those are all non-cash business deductions that could give you an argument for paying yourself a higher amount out of the PPP proceeds.
we are an owner. Schedule C withdraws and employees. Does the owner get listed under employees because he's collecting PPP dollars in regards to the 2019 Schedule C?
No, the owner gets listed as an owner, and employees are employees. Owners, self-employed owners cannot pay themselves payroll. They have to pay based on the profits or losses of the business. That's their taxable income. And this is all based on taxable income.
Awesome. Oop. Under the language costs incurred and costs paid, do we actually get 9 weeks of payroll?
No, you get 8 weeks, 56 days. It's very specific.
If you were a W-2 in 2019 and transitioned to a 1099 February 1st with the same pay, only taxes not withheld, how will this be addressed? It will be difficult to show true compensation as 2019 will show much less for self-employment. I don't think that question is super clear, and I'm not sure why you would go from a W-2 to a 1099. In many states, it's very clear on what is and what is not an independent contractor. So 1099 compensation is not forgivable. I can tell you that much.
No, it's not. And again, you could also run into trouble, with the IRS for the business. I mean, converting a contractor to an employee, they're always going to let you do that. But taking an employee and making them an independent contractor, you got a lot of hurdles to meet for both the IRS, for unemployment, for the state, for the Department of Labor. There's all kinds of people that are going to come auditing you for that.
I just want to take 2 seconds to say this because I know 90% of our people are in the state of Massachusetts. We have a 3-part test. Number 1, the work is done without the control of the business. Number 2, the person that is a contractor has their own independent business or trade doing that type of work. And number 3, it is not the same type of work that your company does. So it's crystal clear, black and white. A majority of 1099s in this state are misclassified. Don't do it.
Don't forget the 4-step process the IRS has. You want to make sure you're in compliance with that as well.
Yeah, the Massachusetts one is super tough to get around. I'll have to take a look at the IRS one because I'm not as familiar with it. Most of the time, I'd say 90% of the time that I see a 1099, I go through the 3-part test. They're not a 1099.
Same thing with the IRS. Most of I'd say the biggest single issue we have with businesses when they get audited, at least in Arizona, by the Department of Labor or the Department of Revenue, is misclassified employees who are being listed as 1099 when they should be employees.
If this whole situation didn't open your eyes to the fact that it makes sense to do the right thing, you've lost your mind. Right now, you're not going to get funded because you illegally paid people. So this is a really good opportunity for you to try doing the right thing going forward. This is one of our I told you so moments. Sorry. How do we get CPE credit? I don't think we have credits available for this one today, right?
Well, I did check up on that after last time. If you've monitored the attendance,
I
we
have.
can issue a certificate because we split, because we're doing this online, and I was doing live classes, but I'm in the process of applying for, an online code with NASBA, but most state boards of accountancy, as long as I sign off that I developed the course and you sign off that the fact that they were in attendance and they answered all the polling questions, that will allow us to issue a certificate. We just need the names.
Okay, so any CPAs here that are looking to receive CPE credit, please email service@brabopayroll.com and we'll keep track of you. Again, if you're a CPA and you wanted to get some CPEs for this webinar, email service@brabopayroll.com.
And don't forget to include your name the way it is written on your CPA license, because most states require those to match.
A great ad. I appreciate that. That's awesome. Please define owner-employee. There's been a debate about this. Someone provided that the IRS defines S Corp as shareholders versus owners. Employee is a sole proprietor.
No, sole proprietor is never an employee. An S Corp, you can be an employee of the S Corp and be an owner. If you're an employee, you get paid for services. An owner gets paid dividends. The difference is, where they're going to look there is what is in your self-employment tax. So if you're giving yourself a real low salary and a real high dividend, you're reducing the amount of money the owner can take out of the PPP.
What about proving the hours for employees during the 8-week salary or hourly employees when you haven't been able to open, but you've started your payroll to use the PPP? The point of the PPP was to take stress off the unemployment system. So if you're paying people for a time that they're working for you, I do not see you having a problem. Do you agree?
It's whatever time you put into the payroll system.
Great.
I don't think they're going to come back and audit that, because if an employee at the end of the year gets a W-2 for wages you didn't pay them, there's going to be all kinds of complaints being filed.
And I'm going to keep our disclaimer live. We are doing the best of our ability to give you some information. If something else comes out or things are different, it's possible. We're giving you our best opinion at this time. Nancy Lewis, do you have to use the full 75% in payroll costs for it to be forgiven, or whatever percentage you use will be the balance that can be paid back? The way I like to picture this, I actually think about 4 quarters in my head, like money quarters. 3 quarters is payroll. So whatever amount you seek forgiveness in payroll for, you could take 1/3 of that amount as other expenses. It's the benchmark for how much in other expenses you could have. If you got a $100,000 loan and you had $30,000 in payroll, that means you could only have an additional $10,000 or 1/3 of other expenses. So even though you got a $100,000 loan in that situation, you'll only see a forgiveness for 40 grand. 30,000 of it will be
1/4, because 75% has to be payroll.
Right. So it's the opposite.
Of the loan, of the 75% of the amount forgiven has to be payroll.
Agreed. So if you look at 75% being 75 cents, 1/3 of that in addition could be forgiven, which ends up being 25% of the total, or 1/3 of the payroll costs.
Yeah. Okay. Yeah. I see. I just didn't want to have confusion on that.
Yeah. No, it's 75% of the forgivable amount. So when you figure out how much you're going for forgiveness in payroll, if you want to establish how much your bucket is for other expenses, 1/3 of what payroll forgivable is would be other expenses. But the short answer to your question is, you don't have to use the full 75% of the loan proceeds. Just 75% of the forgivable amount would have to be payroll. If an owner of an S Corp who didn't take payroll in 2019 replaced a sales rep who was fired prior to 2/15 is now taking similar payroll, based on what you said, this will receive a higher scrutiny or be forgiven. I think that you have to be willing to explain it.
Yeah, document.
Are you handling questions that were emailed prior to the webinar? No, I'm not. Sorry. If a SM LLC, no employees, had Schedule C line 31 earnings of $14,000 in 2019, but then converted to an S Corp in 2020 and will have much more salary, he will be limited to forgiveness on his 2019 Schedule C earnings. In addition, he was able to borrow based on his $40,000 in wages earned in 2020.
first question is, when did you convert to a schedule? What they say, Schedule C or Schedule?
They said Schedule C, and it said SM LLC, which I'm not familiar with.
I'm not sure what that is either. I've never heard of that. It might be small LLC. I don't know. I've never heard of that one particularly.
Oh, single member. SM.
Single member. Okay, that helps.
I'm just like SM. Yeah, single member.
Yeah, I was trying to figure it out too, thinking back through the categories. And every state has different categories, of course. Again, the key there is documentation. And when did you convert from the LLC to the C corp? Was it before or after February 15th?
My husband is the sole owner for the LLC, sole employee, and the bank showed his income at $100,000 amount. He was approved for $20,833, which is $8,300 monthly written on the loan. 75% would be $15.6K minimum to be eligible for forgiveness for this loan. But I noticed that the forgiveness document, the maximum that a sole is capped at $15.3K. It seems they took the $100,000 and divided by 52, multiply that amount by 8. This is less than the 75% required. Does this disqualify forgiveness? No. So whatever you're able to have forgiven on payroll is what you're paying, during the period, and that just will allow you to take other expenses. You don't have to expend 75% of loan proceeds in order to have forgiveness. You agree?
You have to, the 75% has to be payroll. And there was a lot of confusion initially on how we calculated that self-employment amount. And they specified in the forgiveness loan, the 15,300, whatever it was. I can't remember off the top of my head. I need to go back and look at the slide. If you paid yourself, if you got the loan that went for more than that, I don't think that's going to affect your percentage too much, especially if you're a owner with no employees. Pay some rent or utilities, phone bills, etc. with the rest of it, because you still got that 25%.
We have an awesome question here. If someone is approved and accepts the EIDL, are they unable to sell their business? If they have a second business, can the debt be transferred to their second business? I think the overall premise of this is, can they change anything about their business once they have an EIDL? Can they change the owners? Can they change the shareholders?
The SBA has the right to call the loan if you sell the business or if you move the business outside of the disaster area. So, and again, if you're under that 25,000, you can do whatever you want because it doesn't apply. It only applies if the business is collateralized. But the way a disaster loan works is you have to maintain the business in the disaster area. That nice thing, the entire United States is a disaster area. So you can move to a new location, shouldn't have any issue with that. You do need to notify the SBA. However, if you sell the business or sell the assets of the business, I think you got a pretty good chance of seeing the loan get called, and the new owners are going to have to get their own money.
Great. If you receive the EIDL advance, should you deduct it from your PPP to receive full forgiveness?
No.
Okay. So dismiss.
You add it to the PPP and explain what you spent the money for so that they can see that you didn't double dip.
I'm under the impression, and I may be wrong, that your forgiveness will be reduced by your EIDL advance, but let's just see what the banks do.
Because the EIDL advance is forgiven too.
All right.
It's the EIDL loan you have to pay back, not the advance.
Right. Fair enough. If we receive the loan on the 16th and pay payroll out for the next 2 weeks, or for the 2 weeks prior to that, I think we've already covered this several times. So it's the earned and used. Can we use the pay period as the alternate? Yes, you can use the alternate pay period in order to line up with that. And again, you get the loan proceeds, and then if you're in the middle of a pay period, you wait until the beginning of your next pay period, and that becomes your alternate period going forward. My question was answered in a slide. FTE works 40 hours per week. All of my staff are part-time, working 6 hours per day. 5 of them did not want to. We've already addressed this. Any answer to my question above? Yes, we already answered that. I think we are out of time. We've got questions still pouring in. How you doing, Bob?
I'm doing good. I got to get on another webinar at 11 o'clock, so I'm going to have to cut it off no later than 10:30. But probably the easiest thing, if there's some additional questions, just do what you did last time.
Yep.
Shoot me a spreadsheet, and I'll be glad to take my best shot at answering them.
All right, very good. Thank you, everyone.
Everybody, I appreciate your joining, and have a great day.
Thanks.